They will ask you the problem on this ground for 10 marks. And there is another alternative choice for this. Then preparation of, that is, income statement. Preparation of income statement, and number 2, that is balance sheet. Both are vertical. Both are vertical balance sheet. Vertical system will be there. In this, first we'll see what is the ratio first and what are the types of ratio. Correct? Here they are given to you. Ratio means, so it is a mathematical number. Ratio is a mathematical number, or it is a mathematical terms. It can give the distinguish between last 2 years figures. It is in percentage, sometime it is in full, or sometime it is in fractions. Therefore, there are 3 types of ratios. First will be balance sheet ratio. Balance sheet ratio 1, and second is income statement ratio. Income statement ratio, and third will be combined or mixed ratio. Combined or mixed ratio. So in that we'll see there are near about 39 formulas. Out of 39 formulas, they will ask you 5 ratios in the examinations for 10 marks. 2 marks per ratio. So out of this balance sheet ratio. So balance sheet ratio means they will give to you 2 years balance sheet. Last year's, previous years, and current year balance sheet. Say for example, suppose this is, they will give to you 22, 23 and 24, 25, or they will give to you 22, 21, 22, 22, 23, and here 23, 24, like this. They will give to you 2 years balance sheet. In that 2 years balance sheet, first ratio they can ask 100% will be current ratio. First is current ratio, you take that. Current ratio. So in that current ratio is calculated by using the formula current assets upon current liabilities. Current assets upon current liability is current ratio. Current assets divided by current liabilities is current ratio. They will ask 100% guarantee, 2 marks for this. Current ratio. Then what is current assets then? Current assets are those assets which can be converted within a span of time into cash, is called current assets. For example, cash in hand, cash at bank, bills receivable, then sundry debtors, then prepaid expenses, work in progress, loose tools. So these are all current assets.
How many types of
Current assets, only that is the type they are given. Cash in hand, cash at bank, sundry debtors. Then after sundry debtors, bills receivable will be there. Prepaid expenses. Then work in progress. Liability, I will tell later on. So these are the current ratios. Then current liabilities now. Current liabilities are those liabilities which can be converted within a span of time. For example, sundry debtors, sundry creditors, bills payable, bank overdraft, outstanding expenses, and they are given to you bank overdraft. These are the current liabilities. Then in that current liabilities, they will give to you balance sheet. On the asset side, current assets as well as fixed assets they will give to you. On the balance sheet, current assets as well as fixed assets they will give to you. In that you can ascertain first current asset and ascertain current liabilities. On the liability side, they will give to you equity shares, preference shares, debentures, and other will be sundry creditors, bills payable, bank overdraft, outstanding expenses, provision for taxation. So this will be given to you, and out of that you can take from that figures from the balance sheet a certain current ratio. Current assets divided by current liability is current ratio. It is standard ratio is always 2:1. Current ratio must be always 2:1 is the current ratio. So as compared to the current ratio, always you can start like this. Current ratio is 2:1 is the current ratio. It is called standard ratio. It is called standard ratio. 2:1 is the standard ratio it goes to. Got it? Then another thing is there, just we'll see. Liquid asset, liquid ratio. For that, these are the two ratio they can 100% ask you. Liquid assets, or it is called acid test ratio or liquid ratio. Liquid ratio, acid test ratio, they are given to you on these things. Means for that, it is calculated. It is also called quick asset also, quick liability, quick ratio. It is called quick ratio, liquid ratio, or it is called acid test ratio. Acid test ratio. Three names is there. Then expenses minus advances. Quick asset. Quick asset is from current assets you have to deduct stock, or it is called inventory, stock, then prepaid expenses minus advances if any. Then quick liabilities. Quick liabilities means current assets minus bank overdraft. Current assets minus current liabilities minus bank overdraft. So here for this, current assets minus stock minus prepaid expense minus advances. These are called the current quick asset, that is called. It is called quick asset. Quick asset is equal to current assets minus stock minus prepaid expenses minus advances. Then quick liabilities is current liabilities minus bank overdraft. These are quick liabilities, and formula for that will be quick assets upon quick liability. Standard ratio is 1:1. 1:1. Got it? Like this. Then after that, income statement ratio. Income statement means trading profit and loss account they will give to you. In that trading profit and loss account, we have to take into consideration the ratio. First is gross profit ratio. What is gross profit? Gross profit means sales minus cost of goods sold is gross profit. Out of certain gross profit, sales or gross sales less returns minus cost of goods sold. Then cost of goods sold is opening stock, add purchases, then add direct wages, then indirect expenses, then carriage inward, less closing stock. This is called cost of goods sold. Cost of goods sold, it is given to you. So you will get the gross profit. Then gross profit ratio is gross profit divided by net sales multiplied by 100. So it is always in percentage. Gross profit divided by net sales multiplied by 100 is gross profit ratio. The net profit ratio. How to calculate net profit? First will be sales less cost of goods sold. You will get their gross profit. From gross profit deducted all the operating expenses. Operating expenses mean administrative expense or office expenses, selling distribution expenses, finance expenses. These expenses you have to deduct. You will get their net profit before interest and tax. Then less interest, net profit before tax. Less income tax, you will get their net profit after tax. Therefore, for net profit ratio is net profit divided by net sales multiplied by 100. You will get like this. Okay, these are the ratios. So in page number They are given to you. This is the page number 139. These are the ratios. These are various ratios they are given to you in that page number. So just see, first is current ratio is given to you. Current assets upon current liabilities. Second ratio is given to you quick ratio. Quick ratio is quick assets upon quick liabilities. Then the net working capital ratio. Net working capital upon net assets is this ratio. Then cash position ratio. Cash plus marketable securities divided by liquid assets, liquid liabilities. Then proprietary ratio. Shareholders fund divided by total assets. Then solvency ratio. Outsiders liability divided by total assets. Then fixed asset to proprietary ratio. Fixed asset divided by proprietary ratio. Then they are given to you debt equity ratio. Outsiders fund divided by shareholders fund. So these are various ratio. Operating ratio. Cost of goods sold plus operating expense divided by net sales multiplied by 100. These are ratio is given to you. And they are given to you. This one problem is there. Okay. So you have got mobile. Copy down this rate. Okay, now see. In this ratio, from the following balance sheet of Akola Limited calculate the following ratios. They are given to you here 8 ratio. 8 ratio is given. But in the examination they will ask you 5 for 10 marks. So there will be 10 marks problem on this ground. Now we'll see this problem. One by one they can ask you. Now see this thing. Sometimes they will ask you 2 years balance sheet and your comments they can ask you. So here they will give to you a balance sheet here. Okay. In that balance sheet on the liability side they are given to you equity share, then 6% preference capital, general reserve, profit and loss account, provision for taxation, bills payable, then bank overdraft, sundry creditors, 12% debenture, liability side. Asset side, goodwill at cost, plant and machinery, land and building, furniture, these are fixed asset. Inventories, bills receivable, sundry debtors, bank and investment short. So these are current assets. So from that they ask to us current ratio first. Then we can take into consideration here, first will be current ratio. First is current ratio then. In that current ratio, we'll see this calculation of current ratio. Then current ratio is equal to current assets upon current liabilities. Current assets upon current liabilities. Current assets upon current liabilities, current ratio. Now we'll take here, by leaving some space, you will take here current assets. Which are current assets in this connection you will take there? Current assets are, in this problem, they are given to you inventories. Inventory is current asset. Inventory means stock. Inventories. Plus, they are given to you inventories, bills receivable is there. Bills receivable. Bills receivable plus another is given to you sundry debtors. Sundry debtors plus sundry debtors, then plus they are given to you bank plus they will give to us the investment. So these are things. Now we'll take their inventories. So inventory is given in this problem is 6 lakh. 6 lakh plus bills receivable is 30,000. Then sundry debtors is given to us 1,50,000 plus bank balance is given to you 2 lakh. 2 lakh is bank balance. Then after that short term investment is 20,000. Now we must take this total. So we must take this total. The total is your brought calculator. Hmm. Just see. Its total it comes to
60 lakhs.
16 lakhs, 6 lakh. 6 lakh 30,000, 1 lakh 50,000, 2 lakh and 20,000. It comes to I think 10 lakh.
10 lakhs.
You'll get 10 lakh is current assets. Okay. Now we'll take here current liabilities. In this problem, current liabilities are, just see, current liabilities are bills payable. Bills payable, bills payable plus another liabilities given to you, bank overdraft, sundry creditors. BOD plus sundry creditors. Sundry creditors. See here, bills payable plus bank overdraft plus sundry creditors. So these are the current liabilities there. In that current liabilities, we put the values now. 1,24,000, 20,000 is equal to 1,24,000 plus 20,000 plus
1,30,000,
no, I'll take you. 1,24,000, 20,000, 80,000. What is this total? This 1,24,000, correct? 20,000, 80,000. Then provision for taxation plus provision for taxation plus 1,76,000. This will be 4 lakh. It comes to 4 lakh. Huh?
2 lakhs.
No. 124 plus 20 plus 80 plus 1,76,000. Just see. 1,24,000 plus 20,000 plus 80,000 plus 1,76,000. 4 lakh, no?
4 lakhs.
Correct? It is 4 lakh. Then we have to use this thing. So just see, it's equal to 10 lakh. 10 lakh divided by 4 lakh. You do it. Just 1 minute. Calculate, right? Now use this calculator because they will give the, see, 10 lakh divided by 4 lakh. Divided by 4 lakh. You will get there 2.5 is to 1.
4 lakhs.
4 lakh divided by 4 lakh. You will get 2.5. Correct?
Yeah, 2.5.
2.5 is to 1. This is 1. And this is for 2 marks.
Into divide.
No. 10 lakh divided by 4 lakh. Always you have to write this is to 1. Because the standard ratio is 2 is to 1.
Got it.
Like this.
Got it.
Is to 1. This is for first thing. Now they asked to us liquid ratio. You note down it? Take note.
15,000.
So 1,24,000 plus 20,000 plus 80,000 plus 1,76,000. You will get there 4 lakh. And then 10 lakh divided by 4 lakh. 2.5 is to 1.
2.5.
Is to 1. This is first ratio. Now we'll see second ratio, liquid ratio they asked us. Second ratio is liquid ratio. Liquid ratio. Liquid ratio is the second ratio. Liquid ratio. Correct? The formula is liquid assets upon liquid liabilities. Liquid assets upon liquid liabilities. This is the formula. Then which are liquid assets will take first? Liquid asset is equal to current assets minus stock
minus stock.
minus stock. Prepaid expenses is not given here. Current assets minus stock. How much current assets? 10 lakh. 10 lakh minus stock. Stock is given to you. Inventory 6 lakh.
Plus minus 6 lakh.
Minus 6 lakh. You will get there 4 lakh.
4 lakh.
4 lakh. You will get this 4 lakh. Then liquid liabilities. Liquid liabilities is equal to current liabilities minus bank overdraft. Current liability is 4 lakh. 4 lakh. In initial, we have already ascertained that. Minus bank overdraft is given to us. BOD is 20,000. You will get there 3,80,000. 3,80,000. Then you have to ascertain this ratio 4 lakh divided by 3,80,000.
4 lakh divided by 3,80,000.
हाँ 4 lakh divided by 80,000.
Divided by.
Now you can make this. 4 lakh divided by 3,80,000. 1.05. Correct? 1.05. Correct?
1.05.
1.05 is to 1.
is to
1. Write down this. This is the first ratio. 2 ratio. 1.05 is to 1.
51.
If they ask the comment, then how to write comment here? As compared to standard ratio 1 is to 1, this ratio is satisfactory ratio because 1.05 is to 1 satisfactory. In the initial stage, what they are given to you 2.50 is to 1. That is also standard one. This is a quite satisfactory ratio.
Additional one.
Additional is to 1 you have to write every time. Is to 1 every time. Now we'll see the absolute liquid ratio they asked us. Third number, third ratio is absolute liquid ratio. You have taken this?
Yes.
Oh, this up to this. Okay. Third ratio now. Third ratio is absolute. Third ratio is absolute liquid ratio. Absolute liquid ratio. Absolute liquid ratio is equal to cash at bank plus cash at bank plus short term investment divided by current liabilities. So cash at bank is given to you 2 lakh and short term is 20. 2 lakh plus 20,000. 2,20,000. Okay. Then current liability which is already given to us, how much? 4 lakh. 4 lakh. Then you have to write down the ratio here. 2,20,000 divided by 4 lakh. You will get this. 2,20,000 divided by 4 lakh. It is how you will get this? 0.55 is to 1. No, 2,20,000. 2,20,000 divided by 4 lakh. You will get 0.55. Correct? 0.55 is to 1. Note down this. Now, next is current asset to fixed asset. Current asset to fixed asset. Current asset to fixed asset. Fixed asset. So in this current assets is already given to us. Correct? Current asset is already given. How much current assets?
CA.
CA means 10 lakh. Then fixed asset we have to ascertain. Fixed asset is equal to fixed asset. Just see. In this fixed asset will be goodwill. The given to us fixed asset is goodwill, plant and machinery, furniture, land and building. Take here. Goodwill plus another is plant and machinery. Plant and machinery. Then furniture plus land and building. So these are fixed assets. So in the balance sheet given to you, in that balance sheet, goodwill, plant and machinery, furniture and land and building. So these are fixed assets. The value of that will be put now. First, goodwill is 5 lakh. Plant and machinery is 6 lakh. Then furniture is given to us is 1 lakh. See, 5 lakh, 6 lakh, 1 lakh furniture, land and building 7 lakh. Land and building 7 lakh.
Total 19 lakh.
It is 19 lakh, correct. It is 19 lakh. Okay, correct. You are right. Then we have to use the formula for this. Current assets upon current assets to fixed asset ratio. Fixed current assets to fixed assets ratio is equal to formula current assets divided by fixed asset divided by fixed asset. Current assets divided by fixed asset. Current assets is 10 lakh divided by 19 lakh
10 lakh.
divided by 19 lakh. $19 lakh. 10 lakh divided by 19 lakh. How much you'll get? 0.562. Correct? 0.562 is to 1. You take up to this moment.
Current asset.
Current assets to fixed asset ratio is equal to current assets divided by fixed asset. Current assets are 10 lakh and fixed assets are 19 lakh. To 0.526 is to 1.
10 lakh.
Divided by 19 lakh. 0.526 is to 1. 1. Correct. Now, another ratio they asked to use, debt equity ratio, 5th number. Debt equity ratio. 5th ratio they asked us. Now just see here, 5th ratio is debt to equity ratio. debt to equity ratio. Fifth. This is the fifth ratio. Debt to equity ratio. Formula. Long-term debt divided by long-term debt divided by shareholders fund. Shareholders fund. Long-term debts divided by shareholders fund. Then long-term debt is given here in this case is long-term debt. Long-term debt is given to us. Long-term debts. It is 12% debenture. Long-term debts is equal to, it is debenture. Debenture is a long term, 12% debenture. 12% debenture is equal to 5 lakh. Long term debt is 5 lakh. Then shareholders fund. We'll take shareholders fund. Shareholders fund. Shareholders fund is equity shares, preference shares, then profit and loss account, reserves and surplus you take there. Now we'll take shareholders fund is equal to equity shares plus preference shares plus general reserve plus profit and loss account. Equity shares plus preference shares plus general reserve plus profit and loss account. So in that we'll just put the figure given to you. Equity shares 10 lakh. Preference shares given in this problem is 5 lakh. 5 lakh plus general reserve given 1 lakh. 1 lakh and profit and loss account is given to you 4 lakh. So this is shareholders fund. How much you will get there? Just see. 10 lakh plus 5 lakh plus 1 lakh plus 20 lakhs you get. Okay, you're right. 20 lakhs. Then use the formula. By using this, you will get their long-term debt is 5 lakh divided by 20 lakh. 5 lakh divided by 20. Long-term debts divided by shareholders fund. 20 lakhs. 5 lakh divided by 20 lakhs.
0.25.
0.25 is to 1. 0.25 is to 1. This is the one thing. Another also you can take here. Second, therefore, long-term debts divided by long-term debts plus shareholders fund. Long-term debts plus shareholders fund. Long-term debts divided by shareholders fund. Now, long-term debts is, we already got 5 lakhs. Then here, long-term debts is equal to 5 lakh plus shareholders fund. 5 lakh plus 20 lakhs is equal to 25 lakhs. It is 25 lakhs. Correct? Then use that ratio here, figures. So it comes to 5 lakh divided by 25 lakh.
0.5
No,
to 0.2.
just see. Divided by 2.2 lakh 25 lakhs. 0.020 is to 1.
0.2.
0.20 is to 1, like this. Now, sixth ratio they asked. In examinations, how many ratio they asked? 5. 5 ratio. 2 marks each. Now, sixth ratio. This is the big problem they are given for your understanding. And ratios are 40. But out of 40, 5 ratios they can ask, which is repeated again and again. Repetition will be same. Only figure changes. Figures will be changed now. You take here proprietary ratio. Sixth number. Proprietary ratio. Proprietary ratio. Formula. Proprietary ratio is equal to formula shareholders fund divided by total assets. Shareholders fund divided by total assets. Shareholders fund divided by total assets. Shareholders fund divided by total asset. Then shareholders fund we already calculated 20 lakhs. 20 lakhs shareholders fund. Total assets mean total of the balance sheet. Total assets mean total assets and balance sheet total 29 lakhs. Because shareholder fund 20 and 29 is the total of the balance sheet.
20 divided by
20 lakh divided by 29. You will get 0.69, correct?
0.6.
9. 89 means 0.69. Because more than 5 you have to add 1. So 0.69 is to 1. Is to 1. The next number now. Capital gearing ratio, 7th. Capital gearing ratio. Capital gearing ratio is equal to fixed interest bearing securities. Fixed interest bearing securities divided by equity share capital plus reserves. Equity share capital plus reserves and surplus.
Same.
Equity share capital,
Same capital.
share capital plus reserves and surplus. Fixed asset they are given to bearing interest means 10 lakh. They are given to us fixed interest 10 lakh. 10 lakh. How that 10 lakh? 10 lakh means 5% preference and debenture.
5%.
5% preference plus 12% debenture. And this total is there. Because 5, it is 6%, not 5, 6. 6%. 6% debenture preference shares is 5 lakh. and debenture is 5 lakh. 5 lakh plus 5 lakh, 10 lakh is equal to 10 lakh. Then equity shares capital, you know this. So this is 10 lakh divided by equity shares is given. In the problem, equity shares is 10 lakh plus reserves and surplus. Reserves and surplus will be general reserve 1 lakh and profit and loss account 4 lakh, 5 lakh, 5 lakhs, 5 lakh it is. Because see, reserves is given to you 1 lakh general reserve and 4 lakh is profit and loss account. Like this 5 lakh. So it comes to 10 lakh divided by 15 lakh. Your answer is there. 10 lakh divided by 15 lakh is to 0.66 or 67. 0.67 is to 1. 6666 like this. Therefore, 0.67 is to 1. Now, last ratio they asked to us is fixed asset ratio. You are taken down up to this. Now, last ratio number 8. Last ratio number 8. Last ratio will be number 8. 7, 8. That is fixed asset ratio. Fixed asset ratio. Fixed asset ratio is equal to, fixed asset ratio is equal to fixed asset upon capital employed. Fixed asset upon capital employed. Capital employed. Fixed asset upon capital employed. Fixed asset is given to us initial stage. How much fixed asset? 19 lakh. Fixed asset is 19 lakh. Capital employed will be 25 lakhs. Divided by 25 lakhs. You will get there 19 lakh divided by 25 lakhs. How much you'll get? 0.76, correct. 0.76 is to 1. Every time is to 1 you have to write. Don't forget to writing now. So that's it for the problem number ratio analysis. One problem they can ask you for this problem, they can ask you for 10 marks, asking 5 ratios. And for this, now we'll see fund flows now. Fund flows. I will explain the fund flow. There, once again, there will be one problem here for fund flows. So, fund flow statement means we have to prepare there. Fund flows means how the funds is employs, means how fund, what are the sources of fund, how you collect the fund, and so far collected are sources of that fund, how that fund is applied, application of funds. Therefore, for that they prepare statement of funds flow statement. Fund flow statement they prepared. On the left hand side it is called sources of fund, and on the right hand side they can ascertain application of funds, correct. Then they prepare a statement here, statement showing changes in working capital. They prepare a statement showing changes in working capital, and another will be adjusted profit and loss account. They will ask adjusted profit and loss account you have to prepare. Then statement of sources and liabilities. In the applications fund, that is application funds, statement of fund flows, sources of fund and applications, like that. Then adjusted profit and loss account and statement showing changes in working capital. How to prepare statement showing changes in working capital to ascertainment of increase or decrease in working capital. Increase or decrease in working capital. What is working capital then? Working capital is equal to assets minus liability is working capital. That is current assets minus or assets, current assets minus current liability is working capital. It is excess of current assets over current liability is called working capital. Got it? And you know current assets, which are the current assets? Cash in hand, cash at bank. See, cash in hand, cash at bank, sundry debtors, bills receivable, prepaid expenses. So these are current assets. Then current liabilities are bills payable, sundry creditors, outstanding expenses. So these are current liabilities. Correct? Then first you have to prepare that statement showing changes in working capital. How to prepare the statement showing changes in working capital? We write on the top, statement showing changes in working capital. First will be particular column. Then they will give to you previous year and current year. And changes increase or decrease. Changes in working capital increase or decrease. So in that, first will be A, current assets. Cash in hand, cash at bank, bills receivable, like that. Total of A, less B. Less B means current liabilities, bills payable, then sundry creditors, bank overdraft. Then you take here increase or decrease in that column you have to write. Therefore, first you have to prepare the statement of changes in working capital. They are given in fund flows. Fund flows will be, they give the problem on you on fund flows statement. So just see here. Fund flow statement. Fund flow statement. On page number, just see, I'll show you. Page number 166. I told you, first is fund flow statement. So on the sources, what is the source? Fund from operation is the source. Then issue of additional capital, issue of debenture, then sale of investment, sale of asset, then sale of loan raised, loan taken, then non-trading receipts and decrease in working capital. So it comes on this side. Then application, how you have to apply this fund? In that first is loan funds to operations, loss fund or loss of fund to operation if there is a loss. Then redemption of preferences, if you repayment. Then redemption of debenture, repayment of debenture. Purchase of investment, while purchasing cash is going on. Purchase of asset, again asset purchase, cash is outflows. Application, payment of loan, if you paid loan, amount is going. Payment of income tax, you paid the tax, cash is going out. Then non-trading payments and increase in working capital. So like this statement you have to prepare. Then another statement, that is statement showing changes in working capital. How to ascertain funds from operation by means of preparation of adjusted profit and loss account. This adjusted profit and loss account we have to prepare. And lastly, we have to prepare this statement showing changes in working capital. How to prepare these changes in working capital? Just see. On the top you write statement or schedule of changes in working capital. First will be assets and liabilities or particulars.
Yes.
Previous year, current year. Then changes in working capital, increase or decrease. Then total of A means current assets, less liability. Liability, the current asset will be stock in trade, debtors, cash balance, bank balance, prepaid expenses. Then current liabilities will be sundry creditors, outstanding expenses, bills payable and bank overdraft. Now we can take this total you will working capital. Current assets minus current liability, you will working capital. If you get the balance in the first column, you will get there is a decrease in working capital. If you get balance in the first column, there is increase in working capital, and this automatically get tallies. Okay, like that. So one problem they can ask to you in that. Another theoretical question can be asked here, that is limitation of fund flows, then advantages, disadvantages, like that they can ask. Now we'll see this. This is the problem they asked to us. We'll solve this problem. First we'll prepare changes in working capital. Now you can note down this. Take this. Okay. First we have to prepare statement of changes in working capital. Statement of changes in working capital. We have to prepare statement of changes in working capital. Statement of changes in working capital. Statement of changes in working capital. So first you have to prepare like this. First particulars, then another is previous year, then current year, previous year, current year, then changes in working capital, changes in working capital, in that increase and decrease, increase, decrease. So year they are given to us. The year will be, I'll take here 23-24. Like this. Statement of changes in working capital. First year, that is previous year, current year, changes in working capital, increase or decrease. In that A, you will take first current assets. Current assets. In that current assets, what we'll do, we have to take the figures from the current assets on the balance sheet. 2 years balance sheet given to you. So 13-14 they are given, I change it. So here in this stock in trade is current asset, debtors is current asset, and bank balance is current asset. You take this. First will be stock in trade. Stock in trade means closing stock. 49,200, 42,700. 49,200, 42,700. 49,200, 42,700. So here you will get there is a decrease. See, from compared to previous year, always compare. So there is a decrease here. Correct? Right there, decrease. So there is a decrease of 6,500. Huh? Where is that? Investment, where is that? Increase, decrease. Increase and decrease. So here decrease, therefore you write in the amount in the decrease column. Okay. So stock in trade 49,200, 42,700, decrease 6,500. Then now we'll see another is trade debtors. Trade debtors. Trade debtors. The amount of trade debtors is 14,900. 14,900 and another is 17,700. So that trade debtors is increased here. How much? How much increase? From 17,700 minus 14,900. So there is an increase of 2,800. Right in the increase column. Correct? 17,700 minus 14,900. 2,800 increase it is. Then bank balance. $9,000. 9,000 is bank balance. And 7,800. So there is a decrease. Decrease of 1,200. Correct? 9,800. 1,200 decrease. Now we'll take this total of A. This is current assets. You take this total of three figures. While taking the total of three figures, you will get there 7,300. And next is 6,800. What I done here? I take this total three figures, these three figures. Then we'll take here B less current liability. Current liabilities. So in that current liability, I'll take here current liability will be bills payable and trade creditors. Only two liabilities are there. Bills payable. Bills payable. B less current liabilities. B less current liabilities. Bills payable is given to us 11,360. 11,360 and 11,840. 11,840. Now just see 11,360 and 11,840. $480. Just see. Don't write here. 480 is increase, but liability increase means write in the decrease column. Opposite. 480. Actually, it is increase, but write in decrease column. Then another sundry creditors. Trade creditors. Trade creditors. The amount of trade creditors is given to you 5,740. 5,740 and another is 6,360. Once again it is increase, correct? But write in the amount decrease column. 6,360 minus 5,740. 620, there is a decrease. Correct? Actually, liability reverse. Increase means write decrease column. Decrease means write in amount increase column. Like that we have to do. So now we'll take the total of B. Take the total of B. This total of B will be 1,700. Another will be 18,200. 18,200. Now we'll take this total. Then working capital. working capital. Working capital A minus B. From this you deduct this 7300 minus 1700, you'll get 56,000 here. Then another will be 50,000 you'll get. Now working capital will get there 56,000 and 50,000. Now just what you have to do, you take this total, which is heavier you take. Heavier is 56,000. You'll get here 56. Put 56 here. You'll get here balance 6,000. That is called decrease in working capital. Decrease in working capital. Suppose you will get it in first column. Suppose this is heavier and get a balance here. That is called increase in working capital.
Both are equal.
Huh?
Both are equal.
Because this is heavier put here and ascertain this 6,000 balancing figure. Correct? But it comes in the second, it will be decrease. So balance comes in the first column, it will be increase. Now it is decrease means you write this amount in the first column here. And ultimately it must tally. It must tally. 8,800. And this is also same equalize 8,800. This is a statement, one statement. Got it? So you'll get here decrease in working capital. Now we have to prepare here, that is adjusted profit and loss account. We have to prepare. After this, we have to prepare adjusted profit and loss account. Adjusted profit and loss. Because this is a required figure, adjusted profit and loss account is prepared to ascertainment of funds from operation. Funds from operation, for ascertaining, we have to prepare adjusted profit and loss account. Then we have to prepare finally statement of application, funds and application, fund flow. Statement of fund flows. You take here adjusted profit and loss account. Profit and loss account. You prepare this adjusted profit and loss account in this manner, debit and credit. So adjusted profit and loss account. In this, they gives to you balance. From this balance, you take their balance, profit and loss account balance here. This 4,000. You take here by balance brought down. 4,000. And to balance carried down. To balance carried down is given to you 5,000. From this you have to make the adjustment. This is the opening balance and this is the closing balance. So just see, profit and loss account 4,000, 5,000. This. Now from this what you have to do, you have to, goodwill is there, just here, goodwill. 10,000, 5,000. It is reduced, correct? 10 to 5 means it is goodwill written up, you write there. Here write to goodwill written up. Written up. 5,000. Difference. Because from 10, 5 on, 5 remains. So that is called goodwill written up. Okay. Then we'll see next things. For that will be, they are given here interim dividend paid during the year. Just see, interim dividend paid. Correct? So, to interim dividend. Interim dividend paid is 3,500. Finish now. These are the only one adjustment made here. Now this is heavier. Correct? Total balance. 13,500. Put here 13,500. You'll get a balance for here 9,500. This is balancing figure. 9,500. It is called funds from operation. This is funds from operation. By funds from operation. Funds from operation 9,500. Okay. Now we have to prepare statement of sources and applications. That is called fund flow statement. You have to prepare. You got it? You have got it. Funds from operation 9,500. By making operation, you got the funds there 9,500. Correct? Now we have to prepare the fund flow statement. We prepare funds flow statement. Now we have to prepare fund flow statement. Fund flow statement. Fund flow statement for the year ended. For the year ended. For the year ended 31/3/2024. In that, we have to prepare first sources. Amount in rupees. Application. Amount in rupees. Like this. Sources and applications. Now, first we will take there what are the sources given to you. See. So here equity share capital. Equity share capital from 70 it goes to 74,000. Just see. From 70 to 74 means there is an increase of 4,000. So right there, this is a source, issue of shares. 4,000. It is 4,000. Then decrease in working capital. Decrease in working capital. So in that decrease in working capital, we ascertain 6,000. Decrease from the statement of where statement of changes in working capital. You will get it 6,000. After that, funds from operation you will getting here. Funds from operation. Funds from operation. By making funds from operation is by making adjusted profit and loss account. So that is 9,500. Okay. Then we have to make the interim dividend paid. So payment of interim dividend, you take care. Payment of interim dividend. So it is paid for 3,500 rupees. Payment of interim dividend is 3,500. Then, so see, now we'll see this debenture 12,000, 6,000. Means it is less, means paid it is. It is called redemption of debenture. So if it is less means it is reduced, paid. But you don't write. Payment of debenture is not recorded. Redemption you write. Redemption means repayment. Then by redemption of debenture. Redemption of debenture is amount is given to you. Redemption of debenture is 6,000. Because from debenture redemption will be, it comes from 12 to 6, means 6,000 reduced, means it is repayment. Then after that, building is there, just see, building 20,000 and it comes to 30,000. It is increase, means they purchase the building. You write here, purchase the building. Don't write buy, purchase the building. Purchase of building. Don't use to and buy because it is a statement. Don't purchase a building. Don't write buy because it is a statement. Or statement there is no to buy.
Purchase of building.
Purchase a building. How much building purchase? 10,000. From 20 to 30 it goes, means 10,000. Difference you will take only. Okay. Then of all these things is over now. So now it must tallies. It must tallies. Let's see. 0, 0, 5, 19,500. This is also 19,500. This is called fund flow statement. This is called fund flow statement. Fund flow statement. Now, there is one problem. Now just see, this is one problem is there. This problem last year I solved it. No. Now just see. They are given to you from the following information. Prepare a fund flow statement of Murali Limited. They will give to you liabilities 22 and 23. So now we note down, take down this. Okay, this problem. Now we'll solve this problem now. Correct? Then we'll wait. Similar it is. First, what we have to prepare a statement showing changes in working capital. You have to prepare first. Now we'll prepare statement showing changes in working capital. Statement showing changes in working capital. First, statement showing changes in working capital. Statement showing changes in working capital. In that first page, like this. First is particulars. Then they are given to us here. मैडम जर पेन आहे पुढे लिहिलंय prepare particulars there. Then you write there year 31/3/22 here 31/3/22 and 31/3/23. Next, now just see Here 31,322. 31,323. Then changes in working capital. Changes in working capital. So first in that column will be increase, decrease. Increase, decrease, increase and decrease. This column. Now first what we have to do? First we have to take the current assets. A is current assets.
Particular.
Particulars in that column, current assets. So in this problem, current assets are inventory, sundry debtors and stock. Bank. Inventory. Inventory 525, 4,20,000. In this problem, they are given to us inventory. Inventory is given to you. 525, 420. Actually, it is increase. Decrease means that right in decrease column. Decrease it is. So it is decreased by 1,05,000. Decreased by 1,05,000. Then inventory, sundry debtors. Sundry debtors 147. 1,47,000. Another is 189. So once again it is increase. So it is increased now. Increased by 42,000. Increased by 42. Permanent marker है वो. 1 minute. Sir. Oh sir. हाँ परमानेंट मार्कर दिला तुम्ही. होय. नाही ना किती. जात नाही का. चालतं द्या जरा दुसरा कटला तर द्या. परमनंट दिला तो जाईन ना ते. हे बघा 4,20,000. Then you will get there 42,000. Then dash here. The next is bank balance. Bank. So for bank is 94,500 and another is 1,05,000. So there is 10,500. Now we must take this total here. Take this total. This total will be 7,66,500 and this total is comes to 7,14,000. Now let's be current liabilities. In total, this is total of A. Total of A. Then less current liabilities. So in that current liabilities given to us sundry creditors. Sundry creditors is 126 and 1,15,500. Actually there is a decrease, but write that amount in increase column 10,500 dash. The next is bills payable. Bills payable 52,500, that is 52,500 and 73,500. It is increased, but right is the amount decrease column 21,000. Now we'll take total of B. This total of B will be 178,500, 178,500 and 189, 1,89,000. Now working capital. Current assets minus current liabilities. That is A minus B. So you will get their working capital is 5,88,000. 588 and another is 525. Now just see here. Here is also heavier. Put here 588. 588 and you will get a decrease in working capital. Decrease in working capital. You will get there 63,000. Put here 63,000 and take the total, it must tally it. So it comes to 126. So from this statement, you will get their decrease in working capital. Decrease in working capital. Now we'll see the another statement you have to prepare, adjusted profit and loss account we have to prepare. Correct? To ascertain funds from operation. Okay, we'll take this. Adjusted profit and loss. Adjusted profit and loss account. Taken down this. Okay. Now like this, 126. Now we have to take adjusted profit and loss account. Adjusted profit and loss account. Adjusted profit and loss account. So in this manner we have to prepare like this. Debit, credit. First will be buy balance brought down. The opening balance of that account is given to you 42,000. This being opening balance. And closing balance is to balance carried down. It is given to us closing balance will be 52,500. So in that they have interim dividend paid. Right here to interim dividend paid. Interim dividend. Interim dividend paid. Paid. Interim dividend paid. $52 it is fine, right? And interim dividend paid is 20,000. Then you will get here funds from operations. This total is comes to 72,500. It is also 72,500. Then you will get here by funds from operations. Funds from operations. Balancing figure you will get. Balancing figure you will get there. So that is 30,500. 500. Now just see from this what we have to ascertain funds from operation. How to ascertain the funds from operation? You take buy balance brought down, it is a liability side, to balance carried down, and they paid here interim dividend paid, amount 20,000. Then you will get balance sheet figure will be funds from operation. Now we have to prepare a statement of fund flow statement for the year end date. Take this. Okay. Now we'll take fund flow statement is the last statement here. Fund flow statement. Fund flow statement for the year ended. For the year ended 31/3/2023. Now we have to prepare this fund flow statement. Sources, amount rupees, application, amount rupees, application amount rupees. Now for this we'll see what are the things that can be come across. So in that first will be issue of shares there. Issue of shares. Issue of shares means how much shares will be issuing just here. They are given to you shares, issue of shares. In this, they will give to you issue of shares. 735 to 787,500. It is increased. Mean they issue the shares, the issue of shares to the extent of 52,500. How come it is 787,500 minus 735? 52,500 issue. Then funds from operation, you have to take there funds from operation by adjusted profit and loss account. That's fund is 30,500. We'll get there. Then decrease in working capital. You will get here decrease in working capital. First statement. Decrease in working capital. First statement is given to you 63,000. 63,000. Then another will be by redemption. Redemption of debenture now. Debenture will be redemption. Reduce there. 126 to 52,500. 126 minus 52,500. So it will be reduced to the extent of 73,500. Then another is there purchase of building. Purchase of building. So building is purchased 52,500. And payment of interim dividend. Payment of interim dividend. Payment of interim dividend. The amount is 20,000. Now, if you take this total, it must be equalized or must be tallied. So, total sources is equal to application of funds. So, equalize this. So, while equaling and taking this total, it comes to 1,46,000. And this is also 1,46,000. So, like this. So, this means they will ask the problem on this ground. How they can ask the problem, I will tell to you. First, problem of ratio analysis. Ratios. Then, common size statement. Common size common size or comparative, and comparative also, and comparative
Common.
income statement, then fund flow statement, problem. Then next they can ask you the problem on working capital. Working capital problem.
Question 5.
No, just see. Then they will ask you economic order quantity. EOQ. EOQ. Economic order quantity problem. Then reordering level. Reordering. Reordering level. That is minimum level, maximum level, reordering level. Like that they can ask you problem. And one problem they will ask you the optimum cash balance. Optimum cash balance. Optimum cash balance. So like that they can ask the problem there in your papers. So just see like this. So that's it. We'll wait because you have to go to Maksal service, Panjim. Okay, we'll wait. So thank you. Now note down these things. This all papers all down like this comparative and common size. Okay, like they are given. They will send you. They will send you. Okay, we'll wait here.